Welcome to Signal of the Day, and we're looking at T or threshold, and where is this going to head to next? Stay tuned and find out at the end of the video. So welcome to Block Party Trading's daily analysis and signal of the day. Of course, if you like this content, give us a like and also boop that subscribe button. But more importantly, let's talk about what is next on the docket for T. Now, what is T or threshold, apart from being one of the hardest tokens to find information for on Google? Because when you type T in, all manner of things come up that is not what you're looking for. But just search threshold and you can find it a lot easier. So what is the Threshold Network? The Threshold Network provides and maintains a suite of cryptographic primitives for several dApps. The network is the product of protocol merger between the Keep network and NuCypher, which was finalized on the 1st of January 2022 with the launch of, that's right, the T token. But what is the T token? The T token is both a utility token for the Threshold Network and a governance token for the Threshold DAO. What is the T token used for though? The T token is primarily used to stake a node. Node operators receive fees from various applications that rely on the Threshold's network's cryptographic primitives. The T token is also a governance token, and users can lock token in coverage pools to earn yields in exchange for underwriting collateral risk in the network. Let's take a look at what all of these signals are telling us. We can see that T threshold has been in a pretty heavy decline, pretty much since the 21st of March. Whilst not the most crazy bearish period as we've seen over 2022, but it is still quite significant. We are looking on Binance on the 6-hour chart. 6-hour gives us a nice and quite reliable, accurate confirmation and conviction for a lot of these confluences. So we're going to take a little look at 5 quite distinct signals that are going to tell us what we're going to do with this trade. The first one, which is my favorite, is bullish divergences. This is when the divergence, or the price should I say, starts to make a divergence from a chosen oscillator. And we see a low here and a lower low down here on both the 10th of March and also the 12th of May. But we see on the oscillator that we see actually a higher low, and that is what is called a divergence. And that is quite common for a reversal. Hidden divergences mean that there is a continuation, and regular divergences mean there is a reversal coming in. There is not only one bullish divergence, however. As you can see just here, we see a higher low on the divergence, a higher low on the oscillator, and many lower lows on the price. So there we have a couple of divergences, which is telling me we are looking at a potential reversal or price momentum is slowing down. Then we also have the iconic bullish signal coming from the block party indicator. Now, to give you a bit of an idea of why we're using this, well, you can see on the chart just here, we have a win, a win, a win, a win, a win, a win, and a couple of losses, which puts us in a pretty good, stable reason to use this as a signal identifier. So we have divergences, we have a signal, but then we head on down to the cumulative volume delta, where we can see a couple more. We see that there is a bit of a trend breakout. As the price is heading down, we finally see a bit of a breakout on the delta, and also it has broken its own little resistance. So that is pretty good news. We've got a divergence, we've got a bullish signal, we've got a breakout on the trend line, and also a breakout on resistance. However, there is one little thing that you do need to be mindful of. As we can see, the 20 daily exponential moving average has been a pretty damn reliable resistance so far. Pretty much since the 18th of April, where we saw our first rejection. However, with all resistances, they do have to break at some point. So it is about getting enough reliable signals to constitute going in on this trade. And for me, there is one final teeny tiny hidden bit of analysis that I do want you to take a look at, which is here. We see a resistance which we're starting to break, which is quite nice, and we've just filled this untested weekly pivot. Well, I guess it's been tested a little bit, but I haven't shined a light on that. So let's take a look at where the targets may actually be. And this is what I am looking at. we can see that we're going to use this swing low as our stop loss, and we're going to go with a 1-to-1 risk reward, giving us a round about an 8.82% target with a nice healthy 8.78% stop loss.